This is APJ. Kind of just going out on a whim here. First, kind of complete rundown video of my trading strategy. So far to start the year, 2025, January, I'm up about 50 grand across 15 funded accounts with Apex. Some are at payout, some are, a little further along than others, but across the board, all are green with full drawdown and something like $56,000 in unwithdrawn profits. So if anyone doesn't know me, I am a full-time futures trader. I've been trading with prop firms for 2 years. I've been trading different markets for about 4 years now. I scalp and I day trade the 1 minute and 30-second time frame, but that does include a use of multi-time frame analysis, right? So starting from where it all begins every week, right? I create a weekly bias, what my bias is, my reasoning behind that bias, my DOL, which stands for drawn liquidity, and you'll see I utilize a lot of ICT concepts. Spent about a year studying his stuff, and that really helped me with my foundational perspective on technical analysis, right? Back in 2022, I was day trading options and strategy hopping, using different indicators, right? Always looking for the latest and best, what I thought was a secret edge in the market, which doesn't exist, before I eventually found the Strat, which is a price action strategy founded by the late Rob Smith, and that eventually led me to ICT. But all that to say, I zoom out, right? I do trade the 1 minute and 30-second, but on my desk upstairs, I have a couple monitors, and across that I have all sorts of time frames, right? 15-minute, 5-minute, 1 minute, 30-second, 4-hour daily chart, 1 hour, and then I have ES for correlation. So yes, I do trade very low time frames. I'm risk on for a very small amount of time, but that comes from a synthesis of that higher time frame and lower time frame analysis, right? So every week I come in with a bias, reasoning. I look at seasonality, which if you don't know, search up a website called Equity Clock. Plenty of seasonality charts there. And this is a January chart for NQ. I only trade the NASDAQ 100 futures index. I used to trade ES, but ES is mathematically less profitable than NQ, so only NQ for the last year and a half or so. I take a look at what news reports we have. I only pay attention to dollar-focused news events, and specifically medium and high impact news drivers, right? So red is high impact, orange is medium. I take a look at all of that, and then, what I want to focus on for this week was de-risking on volume imbalances. I had a couple of stop outs last week due to volume imbalance rejections, so that was a focus this week. Once I have all of my weekly analysis done, I create daily bias every single day. The night before, kind of the same thing there, bias, reasoning, my draw, where I expect price to move toward. My news events that day, right? I don't want to be in a position just before news. I don't want to be in a position, obviously, during news, right? That's just unnecessary volatility that I don't want to be exposed to. So I annotate that. That's the night before, like I said, and then pre-market every morning before the opening bell. And just as a little side note here, I do only trade the New York Stock Exchange hours, so 8:30 Central to 3 p.m. Central, and I don't trade lunch, which is 11 a.m. to 12 p.m. my time. So pre-market prep before that 8:30 bell, I report on overnight price action. I annotate whether or not previous day high, previous day low are intact, right? That tells me kind of what the market's done overnight, what to expect for the New York session. And I really only trade the morning session, right? Just after the open, try to catch some opening manipulation or distribution after that manipulation. New York AM session, drawn liquidity, I take note of that. And you know, I use these draws in two ways. One, to either trade towards my draw on liquidity, or to trade after that draw has been terminated, right? Like if we have a low that I'm targeting, price moves down, takes out that low, and higher time frame, is confluent for a reversal, then I'm going to trade on the long side of the market, right? So draw towards and afterward. Just real quick before we get into some trades from yesterday, just to show you guys kind of what we're working with here. So 15 funded Apex accounts. These are the sizes, so 50Ks and 150s. My equity in them ranges from about $3,000 to $5,000 per account right now. All have been traded this month, really. You see here total P&L across these 15 accounts, $56,000. Very consistent, you see, with the days, right? This isn't, I didn't make all of this in one day. It's not like I'm gambling. I'm not betting it all on one trade or hoping for a win in the market. I have, I've been paid out, but I've never been paid out at this scale. So this will be a long time coming for big payouts. I've had 2-4 account payouts, right? I've had 5-figure months in payouts, but that came from trading 4 250Ks, right? So you see this, this payout is times 4. This was back in November. I had withdrawn 12 grand just off of 4 accounts, but never 15. So this is, no one really deserves anything in the market, right? The market doesn't owe you anything, but I think I've earned the right to trade, quote unquote, big size and across so many accounts. Like I said, I've been trading prop firms for 2 years. Took a while to get funded. It took me 8 months. I got funded in August of 2023. So about a year and a half ago. And then still after that, it took time to get my first payout. That only came in 2024. And then it kind of snowballs. You develop consistency and you start copying a few accounts. But for anyone earlier on in their journey, I wouldn't suggest you just jump in with, now there's some prop firms that do straight to funded. I don't suggest that. If you've never traded funded accounts before, I don't suggest you start copying 5 accounts off the bat, 10, 20. These firms like Apex, Apex is netting 8 figures a month, netting, right? Their bottom line that they're putting in their pockets. And that is from people blowing accounts, right? People buying all these evals, paying all these funded account fees, hoping to copy trade and make $1,000, $2,000, $4,000, $10,000 a day. And then blowing it all. So these companies really capitalize on the fact that people want to get rich quick. So when it comes to my approach, I've taken it very slowly and I've built up gradually. And, I've gotten paid out over and over again with 1 account, 2 accounts, 4 accounts. And now, I'm starting to scale up. I still have room to grow here, right? I could be copy trading another 5 accounts, which I was, and you can check my Twitter for all of that stuff, but start slow and the numbers come. Trading is very scalable. What you do in 1 account, you can do in multiple. If a strategy is consistently making you $100, that strategy could make you $1,000, $5,000, $10,000. It's just about scaling. And number 1 is always risk management and developing consistency that stems from that risk management. So going back to some of my trades. So on Friday, I'll give you one example. So back in my Google Doc journal, I right after every trade, I journal what happened. So what was price delivering from? What was my entry model? What was the confirmation? What was the setup there? What was my draw on liquidity? Then just for my own sake, what accounts was this traded in? My risk to reward. You'll notice my risk to reward is often around 1 or a bit less than 1 to 1, but my win rate is respectable, right? the math works out. The more trades I take, if I'm a bit less selective, my win rate will lower itself down to, something based on standard deviation, maybe 67, 70%. But when it's a few trades, I have plenty of days where I take 3 trades, they're all winners. Even 5 or 6, 5 might be winners, right? So risk reward, the size I used, my P&L per account, rules, did I have a stop in place, and all that stuff, and then a picture of the trade. This is a 1-minute chart here showing my trade, and then, like I said, this was a 30-second inversion. This was the trade itself. So we get a sell-off after the open, retracement back up into this 1-minute fair value gap, right? Deliver from that 1-minute fair value gap, come back down in trend, right? Close below this up close candle on the 30-second, and close below, not at the edge, but below this 30-second fair value gap. So what happened? Move down, move up quickly, stop out some people who chase short, stop out early longs by coming back down, and resume the trend. So I'm onside, the general market direction after the open, and I entered on a bit of a retracement here at around the 21 mark, and I got out at about the 13 mark there for something like 9 points. Now with 2 minis, like I said, my P&L was $330, and then you multiply that with the trade copier. This is on 5 50K accounts. That's $1,500, $1,600 locked in. I generally go for, $300, $500 days on 50K accounts, and then on 150s, $600, $700, $800,000 days. Hopping onto TradingView real quick, just to show you guys what I mean by my multi-time frame analysis. This is my higher time frame analysis chart layout. So it's a 4-chart layout. I have my monthly, my weekly, my daily, and my bottom right chart kind of flips between a 12 and a 4 hour. But my bellwether chart is always the daily. That's my compass, right? Marking out all important PD arrays, right? No matter how low of a time frame you trade, I think it's crucial to understand where you are within a daily candle, right? Where you are when it comes to fractals in the sense of like an hourly chart, right? If we open here and you're bearish on the hour, you want to see a move up to form that upper wick and manipulate that, and then maybe catch a short down. All that good stuff. It's great to know where you are within higher time frame candles. So daily chart, weekly chart I always use for bias, like I said, every week, monthly for seasonality. And then I have a sort of an intermediary chart layout. This contains my hourly, my 4 hour here, which I need to clean up a little bit. And then, like I said, S&P 500 futures index for correlation, and SMT there, always aware of what ES is doing, right? So if ES makes a new low here, which it did, and NQ doesn't, and my bias is bullish, I'm happy to go long on NQ. That adds to my bullish thesis. And then again, daily chart, super important. I have that up one more time here. And then my execution chart layout is consistent of 3 different time frames, so 15-minute, 5-minute, 1 minute. Now I don't execute on TradingView, I execute on Trade-Evate, and I have that on a separate screen. But what I have there is just a 30-second and then a DOM ladder, right? Depth of market, placing my limit and my stop orders. But when it comes to charts, this, what I call a sniper layout, is what I'm looking at the most, really. So I'm looking at a 15-minute to see what fair value gaps are holding, what we're delivering from, what highs or lows are nearby, what is freshly formed, and same thing, just a bit quicker moving on a 5-minute, right? If we have a fresh 5-minute fair value gap after a liquidity sweep, I might be using that as a draw on liquidity. And then, of course, the 1 minute, this is where I'm constantly marking it up through the day fair value gaps, with if we have some sort of trend line, if we have liquidity here or there or relative highs, right? So it's a lot of different things I look at while I am trading, but through years of experience and countless hours of back testing, this is what I found to work best for me. This is what's delivered consistency in my trading. My philosophy is get in and get out, right? Trading is a net loss game. Majority of people lose, right? Majority of people cannot produce consistent returns without blowing up. Very few, a select group of people might be able to be profitable, right? 1 to 5% of traders. But regardless, everybody pays commissions, right? So majority are losing, some are winning, everybody's paying their fees. So it is a net loss business. The house wins, right? So you as maybe you're aspiring, amateur, or advanced, whatever you are, wherever you are in your trading journey, you want to beat the market. And to do that, you do need a bit of a contrarian outlook, not in the sense that, okay, most people are on this side of the market, let me try to fade them. Not like that, but just in the sense that, what are most people doing since most people are losing, and what can I do to not be a part of that group? Or what are the winners doing, and how can I emulate that? Knowing when to put on risk, knowing when to kind of jump in the arena, and doing so efficiently, right? Having a back-tested, proven strategy, having proper